Welcome to Save U.S. Taxes Legally. I want to teach as many U.S. investors, U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, and U.S. 1099 income earners how they can save taxes legally. I I believe that since I learned how to save taxes, I want to teach it to other people too. Now, most people have never heard of this, so if you need to take pictures, please do that. So let's get started. The Spendthrift Trust is legal. It's in the IRS Tax Code 643B. With the Spendthrift Trust, you're going to save federal and state income taxes. You're going to keep your information 100% private. This is on the federal level, not on the state level. So it will not hold any LLCs, S Corps, or C Corps. Do you realize 40% of LLCs, S Corps, and C Corps get sued every single year? That's a huge number to play with. And talking about lawsuits, all lawsuits become frivolous and go away. It's an amazing document. Plus, you're going to leave a legacy for future generations. Let's go down to the next page. Now, this is the 2026 federal income taxes. Most people don't realize there's 4 ways to file taxes. Most expensive is single filer, then it's head of household when you are a single parent with children 18 or younger. Then there's head of household, then there's married filing separately, and then the cheapest way to file is married filing jointly. Now I want to show you something. Check this out, that on January 1st of 2025, the IRS quietly changed married filing separately to match single all the way up to 35% tax bracket. There's 7 different levels: 10%, 12%, 22%, 24, 32, 35, and 37. If you are married, please file jointly. Check this out. Married filing separately at 32% is $2,001,776. Married filing jointly, it's $403,551. Now, if you make $100,000 gross in 2026, you would save 90% on your federal income taxes. At $1,000, you would save $15,040. If you're head of household, you would save $13,410. Or married filing jointly, you would save $11,504. Now, I did a presentation in Arizona, so I'm using Arizona state income taxes of 2.5%. Again, this is 2006 federal income taxes and Arizona state income taxes added together. Single or married filing separately, you would save $15,416. Head of household would save $13,745 in 2026. Married filing jointly would save $11,719. If you're making $200,000 gross, you would save single or married filing separately, you would save $36,358. Head of household making $200,000 gross, you would make $34,498. Married filing jointly, you would save $30,081. Now, this was the presentation I made to a BNI meeting where North Carolina state income taxes are 4.25%. So single or married filing separately, plus saving 90% on federal income taxes, making $200,000 gross, you would save in 2026 $38,090. Head of household would save $35,964, and married filing jointly would save $31,359. Now, I want to talk to you about the IRS Tax Code 643B. The IRS wrote an opinion letter or memo on August 9th, 2023, where the IRS said that they don't like the IRS Tax Code 643B. It also says they don't like the irrevocable, complex, discretionary, non-grantor spendthrift trust. So let's go over these 5 elements. You must have all 5 elements to work. Irrevocable means it goes from generation to generation. The Rockefellers Spendthrift Trust is 7 generations old and has 400 people under the same EIN number, but each individual family files a separate 1041 tax return. Complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. The law firm I work on behalf of inherited a trust that is going to turn 331 years old in 2026. They started the Spendthrift Trust before we were a country. To give you a little bit of history about the Spendthrift Trust, it comes from England way back when King Henry VIII started the Church of England. He murdered a few of his wives, and then he started the Church of England so he could divorce them. He went to go tax the lords and ladies, and they went all the way back to the 12th century to the Magna Carta and said, oh, no, 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 King Henry VIII, you can't do this. It's contract law that came to the colonies while we were still part of England. Our current tax structure went into effect in February of 1913, and the super rich families of 1913, the Rockefellers, DuPonts, the Carnegies, and the Kennedys, made sure they could save taxes. Well, if they save taxes, we can save taxes. So that's complex. Discretionary. Whoever is a trustee or trustees can make the rules for the beneficiaries while they're alive, and then also from the grave. There's no contesting the will. There's no probate or anything else with this. One of my clients, a husband and wife who have 4 apartment buildings in Los Angeles, they have their adult daughter who has a slight problem. They're allowing her to live rent-free in the apartment if she takes 4 random drug tests per month. She went to go sue her mom and dad in the federal court. The judge read through the trust, and he said to her she had 2 choices. Either take the drug tests and pass them, or move out and start paying for her own taxes. Now, the non-grantor means that you're going to have someone who's never going to be a beneficiary or a trustee. They would need their social security number. The non-grantor sets up the trust, and then they sign away. And then finally, the Spendthrift Trust has been in front of the United States Supreme Court on 2 separate occasions, and it's won both times. You can't get more legal than this. Now, the law firm I work on behalf of was started 78 years ago by a Harvard law professor. He wrote 5 separate trusts to save specific taxes. The business trust saves 90% on federal income taxes and no longer pays state income taxes, hence the $200,000 North Carolina state income taxes. The beneficial trust is for all investors to stop paying taxes on profits. There's a mineral rights trust. I've only sold one of those. So one of my clients who has a beneficiary trust inherited his granddad's horse farm in Oklahoma. On the horse farm, there are 6 functioning oil wells. The revenue from the oil wells go through the mineral rights trust. Then there's the charitable trust, and then there's also a senior 65 or older who have either have stroke or maybe they have dementia. Now, this is an actual client. He files jointly. He's a California state expert witness. 90% federal income taxes. He saved $22,687 in 2025. California state income taxes were additional $7,393. He'll never have to pay this money back. Worst case scenario, his great-great-grandson in 2095 thinks he was crazy. The great-great-grandson cancels the EIN number, and he'll be responsible for any taxes saved in 2095. Anything saved in 2026, 2027, 2030, 2045, 2060, 2080, anything else will never have to be paid back. Now, my personal story. My first property that I put into my beneficial trust, I took a contract for $20,000 that was going to go to auction for $50,000. The $30,000 in between, I would have to pay $7,140. When it finally went to auction after COVID on August 28th of 2021, the final bid was $64,326. I made, without lifting a hammer, woohoo, the way I like to invest, $44,328. Now my tax bracket from 2019, when I wholesaled 7 bank-owned properties, my tax bracket went from 22% to 24%, and I owed $94,000. So at 24% tax bracket, I got to save $10,368 I'll never have to pay back. With the Beneficial Spendthrift Trust, you're going to save 5 very specific taxes. You will stop paying short-term capital gains and long-term capital gains. You'll no longer pay interest income taxes. You'll no longer pay dividend income taxes. You'll no longer pay rental income taxes. And you'll no longer pay royalty income taxes. Now, short-term capital gains, if you wholesale, if you fix and flip, if you do auction houses, tax liens, selling crypto, if you're an option trader, or if you're doing a forex investor. Interest income taxes are for passive investors. If you are in mutual funds, in a REIT, if you're doing subject to taxes, if you're doing the BRRRR strategy, if you have notes like I do, if you do creative financing, seller financing, or forex investors, you get charged interest income taxes. So yes, forex investors, you get taxed double. Dividend income taxes are for people in the stock market, day traders, futures traders, commodities traders. If you're living on dividends, you could be saving taxes. Rental income taxes is the same, 10 to 37%. So if you have short-term rentals like Airbnb, vacation rentals, if you have 3, 5, 10, 15, 20, or 100 doors, maybe you're in multifamily real estate, maybe you're in apartment taxes, or if you're doing Airbnb arbitrage. The one tax that's not on here is royalty income taxes. They're taxed a little bit less, between 10% to 35%, 7 different layers. Robin Williams, the great actor, had the Beneficial Spendthrift Trust. His 3 adult children, as of today, pay no royalties on any of his great works. Now, this is just showing you if you make $50,000, depending on what the tax bracket is, versus $100,000 and how much you'll save per tax bracket. This is an actual deal I did. It was a subject to win-win-win for everyone. In my zip code, not my county, just my zip code, there were 224 houses that were in pre-foreclosure. This house, they were leaving from Charlotte going to Houston. The real estate agent had told him he had to fix 14 different things, including pulling up the tiles, redoing the kitchen, and then repainting the house. So I told all the neighbors it was going to be $100,000 before after repair values, or ARV. I gave every single neighbor around the house the list that the real estate agent had given to them of things they had to fix. I did an open house with my real estate agent who gave me the list. The homeowners made $50,000. I paid off their 18 months that they did not pay during COVID, the $45,000 and the rest of the mortgage. I paid both the real estate agent I worked with and the real estate agent who brought in the clients who bought the house 3% commission, and I got to make $145,000 on this house. At 34%, at 24%, I got to save $34,800 on that one house. Now, with the when you sell a business with long-term capital gains, you either pay 15% or 20%. So this gentleman sold his HVAC business for $1.7 million. At 15%, he got to save $255,000 he'll never have to pay back. At 20%, he won't have to pay back $340,000. Now, one of the things that the trust also, because you file a 1041 tax return, you will not have to pay the IRMA surcharge when you're 65 or older on Medicare. This affects Part B and D of Medicare. Every October, the IRS goes back 2 years. So October 2026, they're going to go back to 1040 tax returns of 2024. They're going to add everything together. How much you gain from Social Security, how much you're getting from pensions, how much you're getting from wages, if you're doing a 401k withdrawal, if you're doing a SEP withdrawal, if you have capital gains, interest income taxes, dividend income taxes, rental income taxes, or royalty income taxes, and add it all together. If you're on Medicare and you're single, you would have to pay make more than $106,000. You'd have to pay IRMA, and if you're married, you'd have to pay $212,000. So this chart is showing the 2025 taxes because they haven't put it out yet. So everybody is paying $185,000 each person. One of my clients who I got to save $72,000 in dividend income taxes were also at this level of 489,000. They got to save 406,000. Let's call it $406,000 in Part B's and an additional $79 in Part D on their IRMA, plus no longer paying dividend income taxes. Now, if you want to reach out to me, I have a free 30-minute tax breakthrough session at www.thetrustisyou.com scheduling. I also have a class on the Great Discovery. If you go to www.sallygibbon.com, you're going to register for a free class. You don't have to pay for anything, and it's going to be U.S. taxes, where you're going to get a presentation, 3 articles from Forbes magazine, 2 pages of case law so you can research this to your heart's content, and clients saving thousands and thousands of dollars. So let me get back here. Whoops, let me stop sharing. You don't want to see all what I've been doing. So my goal is to teach as many U.S. investors, U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, and U.S. 1099 income earners how they too can save taxes just like our current president. If you remember 13 years ago when he debated Hillary Clinton and she accused him of not paying taxes, and he said, because I'm smart, his father, Frank Trump, started both the Business and Beneficial Trusts in 1972 when they were sued by the city of New York for discrimination. Our president is a trust baby. If you want to find out more, please set a 30-minute tax breakthrough session with me. Thank you for watching my video, and I hope you learned a lot from that. Take care and have a beautiful day.